and welcome to the Property Wealth Podcast. Today, we're diving into a really exciting topic that could change how you approach real estate investing: networking. You know, meeting investors in your city can open up so many doors and opportunities.
Absolutely, Sarah. It's amazing how connecting with the right people can lead to not just knowledge, but also partnerships and even investment deals.
Exactly. It's all about building those relationships, right? We'll explore how to find and connect with other investors in your area, share practical tips, and maybe even some stories from our own experiences.
And let's not forget, networking isn't just about finding deals. It's about learning and growing together in this journey of real estate. We'll discuss how to approach those conversations and what to say when you meet someone new.
Plus, we'll touch on some common mistakes to avoid when you're starting out with networking. So you don't feel overwhelmed or intimidated.
Yeah, and we'll share how to make those connections more meaningful so you can really build a supportive network that can help you long term.
It sounds like a lot of ground to cover, but it's going to be fun. So let's jump right in and start talking about where to find these investors in your city.
So, Sarah, when we talk about networking, especially for folks over 40, it really ties into some big picture stuff like retirement timelines or planning for the future.
Absolutely, Mike. I think a lot of people in that age group are starting to think about what their retirement looks like, right? It's like a wake-up call sometimes.
Exactly. And networking can play a huge role in that. When you're in your 40s and beyond, you might be looking at, say, 15 to 20 years before retirement. That's prime time to build a solid portfolio.
Right. And with inflation constantly on the rise, real estate becomes a key player in protecting your wealth. It's like a hedge against those rising costs.
For sure. I once worked with a client named Tom. He was in his late 40s and realized, after attending a few local meetups, that he didn't have much in terms of assets. He was feeling the pressure from inflation and uncertainty in the market.
That's a common feeling, isn't it?
Definitely. Tom started connecting with other investors in his community, and he learned about different strategies, like how to leverage existing properties for better cash flow.
That's a smart move. It's amazing how just a few conversations can open up new possibilities.
Right. And Tom ended up buying a rental property, which not only provided him with monthly cash flow, but also contributed to his long-term wealth. It was all about making those connections and learning from others' experiences.
I think that's a key takeaway. The power of community. It's not just about buying property. It's about who you know that can help you navigate the market.
Exactly. And, there's this wealth transfer happening right now, with so many individuals passing down assets to their families. It's crucial for people to position themselves well to either receive or manage that wealth. Networking can help them understand how to do that effectively.
Oh, absolutely. I've heard stories of people who inherited properties and felt completely overwhelmed. They didn't know how to manage them or even where to start.
Right. But if they had a solid network, they could have reached out for advice, guidance, even potential buyers if they decided to sell.
And it's not just about the financial side. There's a huge emotional component to all of this too, isn't there?
Definitely. Having that sense of financial security through property can be incredibly reassuring, especially as you approach retirement. I mean, nobody wants to feel anxious about their financial future, right?
Exactly. Just think about it. If you've built a solid network, you can rely on friends or mentors to help you through those tough decisions. It's like having a built-in support system.
Well said, Sarah. And, the current economic trends are also pushing folks to be more proactive about their investments. With interest rates fluctuating and the market shifting, being connected with knowledgeable people can provide critical insights.
And that's where networking really shines. You can share experiences, learn about emerging markets, or even discover investment opportunities that you wouldn't have known about otherwise.
Exactly. I had a friend, Lisa, who found a fantastic investment opportunity just by talking to someone at a networking event. She learned about a neighborhood that was on the rise and jumped in before prices shot up.
That's a perfect example. It's all about being in the right place at the right time, but also knowing the right people.
For sure. And, connecting with other investors can also help you understand the emotional side, like the fears and anxieties that come with investing.
Right. Investing can be daunting, especially if you're just starting out later in life. Sharing those fears with others who've been through it can really help ease that anxiety.
Absolutely. I remember another client, Karen, who felt so overwhelmed by the thought of property management. But after joining a local investor group, she found others who were facing the same challenges. They shared tips, tricks, and even support when things got tough.
That's so reassuring. It's like a community tackling issues together, instead of feeling isolated in your journey.
Exactly. And when you're part of a community, you're not just learning about what to do, you're also learning about what not to do. And that can save you a lot of time and money in the long run.
And let's not forget about the importance of building relationships that can lead to partnerships down the line.
Right? Collaborating with others can amplify your investment potential. You might find someone who has a skill set that complements yours, and together you can tackle larger projects.
That's such a smart way to approach investing. Plus, it can make the process more enjoyable when you're doing it with someone else.
Definitely. So, as we think about these networking strategies, it's clear that they're not just about making connections. They're about building a foundation for a secure financial future.
And that's especially important as we age. It's all about creating a legacy, not just for ourselves, but for our families, too.
Exactly. And with that in mind, let's dive into some core strategies for effectively networking in your community. So, when it comes to networking, you really want to think about where to find these investors, right? One of the best places to start is local real estate investment groups.
Absolutely. I mean, those groups are just ripe with opportunities. You get to meet people who are, in the same boat as you, and they can offer insights that you might not find elsewhere.
Exactly, and when you go to these meetings, it's important to be prepared. You should have your elevator pitch ready, just a quick introduction about who you are, what you're looking for, and maybe a little bit about your investing experience, even if it's minimal.
Right. And it doesn't have to be perfect. Just, be genuine. People appreciate authenticity.
For sure. And while you're there, take the time to listen too. You can learn a lot from others, experiences, what's worked for them, what hasn't.
And that's where the real value of networking comes in, isn't it? It's not just about making connections, but also absorbing the knowledge around you.
Exactly. And following up afterwards is key. If you meet someone interesting, send them an email or connect on social media. Just say, hey, it was great meeting you. Let's keep in touch.
Yeah, follow-ups can really solidify those connections. And speaking of social media, platforms like LinkedIn are great for connecting with real estate professionals as well.
Absolutely. You can join groups on there, participate in discussions, and even showcase your own experiences or projects. It all helps build your credibility in the community.
And what about attending local seminars or workshops? Those can be great too, right?
Definitely. They often have expert speakers, and you get the chance to ask questions directly. Plus, you're in a room full of people who are actively looking to learn, just like you.
Yeah! There's a kind of energy in those environments that can be really motivating.
Right, and while you're building your network, you want to also be evaluating deals. A solid rule of thumb for that is the 1% rule.
Oh, the 1% rule. That's a classic. So if you're looking at a property, the rent should ideally be at least 1% of the purchase price, right?
Exactly. So if you're buying a property for, say, $200,000, you'd want to aim for a monthly rent of at least $2,000. It's a quick way to gauge if a deal is worth your time.
And it helps weed out those properties that might look good on paper but don't really stack up when it comes to cash flow.
Right, and alongside the 1% rule, you should also consider the 50% rule.
The 50% rule?
Yeah. It's a simple way to estimate your expenses. Basically, you assume that about 50% of your rental income will go toward operating expenses, repairs, property management, insurance, that kind of thing.
So if we stick with that $2,000 monthly rent example, you'd estimate about $1,000 for expenses, leaving you with $1,000. That can help you see if you're still making a profit after your mortgage payment.
Exactly. And don't forget about the cap rate, which is another useful metric. It's calculated by taking your net operating income and dividing it by the property's purchase price.
So if you bought that same $200,000 property and it generates $24,000 a year in rent, minus your expenses, let's say you're left with $12,000. Your cap rate would be 6%.
Right. That's a solid cap rate. Generally, anything above 8% is considered a good investment, depending on your market.
And it just gives you a quick snapshot of how well the property will perform in relation to its cost.
Exactly. Now, when evaluating properties, you might also want to create a checklist. That way, you can consistently assess potential deals.
That's a great idea. What kind of things should be on that checklist?
Well, you'd want to include things like location, property condition, nearby amenities, rental market trends, and, of course, your financing options.
Financing. That's a big one. What are some options that people over 40 should consider?
Well, conventional loans are always a good starting point, but also look into FHA loans if you're eligible. They can have lower down payment requirements.
And what about something like a HELOC, home equity line of credit?
Yes, that can be a smart way to leverage equity in your current home to fund an investment property. Just make sure you know how to manage that debt properly.
Right, and you could also consider partnerships. A lot of people over 40 have networks of friends or colleagues who might be interested in pooling resources.
Absolutely. Joint ventures can help minimize risk and share the workload, especially if you find someone who complements your skills.
And don't forget about the potential for seller financing. Sometimes sellers are willing to finance the purchase directly, which can open up more opportunities.
Yes, that can be a game changer, especially in competitive markets. Just be sure to negotiate terms that work for both parties.
So, as you build your network and evaluate deals, it's important to stay aware of common pitfalls, too.
Definitely. One of the biggest mistakes is not doing enough due diligence on a property before jumping in.
Yeah, that can lead to financial headaches down the road, right?
Exactly. And underestimating expenses is another big one. Always budget for unexpected repairs or vacancies.
And not having a solid exit strategy that can leave you stuck in a bad investment.
Right. Always know how you plan to sell or rent the property down the line, just in case things don't go as planned.
So it really comes down to doing your homework, being prepared, and staying connected with others in the investing world.
Couldn't have said it better myself. You know, Sarah, when it comes to networking, one of the biggest pitfalls I see people falling into is over-leveraging.
Oh, absolutely. I think a lot of new investors get so excited about jumping into the market that they take on too much debt, right?
Exactly. They might think, if I can just get one more property, I'll be set. But what often happens is they stretch their finances too thin. And then when unexpected expenses come up, they're really in a tight spot.
Yeah, and it's not just the expenses. I remember talking to someone who bought a property and didn't factor in the cost of repairs. They ended up with a massive bill, and it pushed them into a really stressful situation.
Right. And that's where networking can actually help. Connecting with experienced investors can provide insight into what to expect in terms of maintenance and repairs, so you can budget more effectively.
Definitely. And speaking of budgeting, ignoring cash flow is another common mistake I see. Investors might get so focused on the potential appreciation of a property that they overlook the importance of positive cash flow.
Exactly. I once knew an investor who bought a property in a trendy area, thinking it would skyrocket in value, but they didn't run the numbers properly. They ended up with a property that barely broke even each month.
That must have been frustrating for them. I mean, if you're not cash flow positive, it can really eat into your budget, right?
Yes! And they had to dig into their savings just to cover the mortgage. If they had focused on cash flow, they would have realized that property wasn't the right fit for their investment goals.
It's so crucial to understand the numbers. And then there's the whole idea of timing the market. Many investors think they can predict when to buy or sell based on trends.
Oh, that's a tough one. I've seen people hold out for what they think is the perfect moment, only to miss out on great opportunities.
Right, like that one investor I spoke with who waited for months, thinking prices would drop. They ended up losing out on a property that later doubled in value.
Exactly. It's important to remember that real estate is a long-term game. If you find a good investment that meets your criteria, it's often better to move forward rather than trying to time things perfectly.
For sure. And then there's the issue of hidden costs. This is a big one that can catch people off guard.
Oh, absolutely. I once had a client who bought a property thinking it was in great condition. They didn't consider things like property taxes, insurance, or even homeowners association fees.
That can really add up. They might think they're getting a great deal, but then, boom, there go the unexpected costs.
Yes, and those hidden costs can really affect your cash flow too. It's vital to do your due diligence and factor in all potential expenses when evaluating a property.
So what advice would you give to someone who's just starting and might be worried about making these mistakes?
First off, I'd say network. Connect with other investors in your area. They can provide invaluable insights and share their experiences, which can help you avoid common pitfalls.
That's a great point. And maybe even consider finding a mentor who can guide you through the process.
Absolutely. Mentorship can be a game changer. Also, don't hesitate to ask questions. If something feels off, dig deeper. Trust your instincts.
Yes, that's so important. And I think doing thorough research is key. Understand the market, the neighborhood, and the potential challenges before making a move.
Exactly. And when evaluating a property, make sure to list out all your potential expenses, even the ones that might seem small. They can really add up.
Right. And if you're not sure what to look for, maybe consider hiring a property inspector. They can help identify issues before you close the deal.
That's a smart move. And if you do find yourself in a tough spot, don't panic. There are often ways to recover from mistakes.
Like what?
Well, if you find yourself dealing with bad tenants, for example, it's crucial to have a solid screening process in place. Look for red flags during the application process. Things like inconsistent income or a history of late payments.
That makes sense. And if you do end up with a problematic tenant, communication is key. Sometimes things can be resolved with a simple conversation.
Absolutely. And if it becomes too much, it might be worth consulting with a property manager. They can take a lot of the stress off your shoulders.
So true. And for those who might be dealing with cash flow problems, it's important to evaluate your expenses and see where you can cut back. Maybe even consider a temporary rental adjustment if you need to.
Yes, and if you've over-leveraged, it might be worth looking into refinancing options. Sometimes restructuring your debt can free up cash flow.
Those are great solutions. It's all about being proactive, right?
Exactly. And staying informed. The more you understand the market and your investments, the better equipped you'll be to handle challenges when they arise.
So, in summary, it's crucial to network, do your research, keep an eye on cash flow, and always be prepared for the unexpected.
Well said. And remember, investing in real estate is a journey. You'll learn and grow along the way, and that's what makes it rewarding.
Definitely. Now let's talk about some practical next steps for our listeners to take as they move forward in their investing journey.
All right. So let's dive into some practical steps you can take right now to start building your network in real estate.
Yeah, that sounds great, Mike. I think a lot of people feel overwhelmed by where to start. What are some first steps?
Well, the simplest thing to do is to look for local real estate meetups. You can find them on platforms like meetup.com or even through Facebook groups.
Oh, absolutely. Those are great places to meet like-minded individuals, right?
Exactly. You can connect with other investors, share experiences, and even find potential partners. Plus, these meetups often feature guest speakers who can share valuable insights.
And they're usually free or very low cost, which is perfect for someone just starting out.
Right. And once you get comfortable in those settings, don't hesitate to reach out to people for one-on-one coffee chats. It's often easier to build deeper connections that way.
That's a great point. So what about online resources? Any apps or tools you'd recommend?
Definitely. One of my favorites is BiggerPockets. It's a fantastic resource for finding forums, articles, and podcasts tailored for real estate investors.
I've heard a lot about that one. It's like a community in your pocket.
Exactly. And they also have a calculator tool that helps you analyze deals. If you're looking at a property, you can plug in the numbers and see if it makes sense financially.
That sounds super helpful, especially for beginners who might feel unsure about the math.
For sure. And there's also DealCheck, which is another great app for analyzing properties. It's user-friendly and gives you a clear picture of the potential return on investment.
And what about checking rental rates? I know that can be tricky.
Good question. Rentometer is a solid tool for that. You can input an address and get a sense of what similar properties are renting for in the area. It's crucial for ensuring your numbers make sense.
Yeah, knowing the local market is key. What other habits can someone start to develop right now?
I suggest setting a goal to analyze at least one deal a week. It can be a property you're interested in, or just something you come across online. This will help you get comfortable with the numbers and the process.
That's a manageable goal, and it would definitely help build confidence.
Exactly. And don't forget to write down your thoughts on each deal. It can really help solidify your learning process and build your analysis skills over time.
And what about books? Any must-reads you'd recommend?
Absolutely. The book on rental property investing by Brandon Turner is a fantastic start. It covers so much ground and is very relatable for new investors.
I've heard great things about that one. What about podcasts?
Well, besides this one, of course, I'd recommend Bigger Pockets Podcast. It features interviews with successful investors, sharing their journeys and insights.
Sounds like a great way to learn while on the go.
And remember to connect with people on social media too. LinkedIn can be a powerful platform for networking with other real estate professionals.
That's true. Engaging with others, posts, sharing your own journey, and asking questions can open doors you didn't even know were there.
Exactly. And, starting small is perfectly fine. Just begin where you are. Everyone started somewhere, and every connection counts.
That's such an important reminder. It can feel daunting, but taking those little steps can lead to big opportunities.
Right. And don't forget to check your local MLS for property listings. Understanding what's available in your market can give you a leg up.
Oh, that's a great tip. Knowledge is power, and knowing the inventory in your area is crucial.
So with these tools in your pocket, you're ready to move forward. Let's recap what we've covered today. Well, we've covered some really valuable ground today, huh, Sarah?
Absolutely, Mike. Networking really is such a game changer in real estate.
Right? So let's recap a few key takeaways. First, connecting with other investors in your city can open up so many doors. It's all about those relationships, right?
Definitely. And I loved how we talked about the importance of attending local meetups. It's not just about finding deals, but also about learning from others' experiences.
Yes. And don't forget the power of social media. Platforms like LinkedIn can be a goldmine for meeting potential partners and mentors.
Exactly. And I think we also highlighted that it's important to be genuine in your interactions. Building trust is key, especially in this business.
For sure. And lastly, remember that networking isn't just a one-time thing. It's about nurturing those relationships over time.
Yeah, and that's what really builds a strong foundation for long-term success. It's all about community.
And speaking of success, building wealth through real estate is totally achievable. If you stay committed and keep learning, you'll see the fruits of your labor.
Absolutely. So if you found today's episode helpful, we'd love for you to like, subscribe, and share your biggest takeaway or any questions in the comments. And don't forget to share this with someone over 40 who's interested in investing in property.
That's right. And next time, we'll dive into joining or starting a real estate mastermind group, which can really supercharge your learning and networking.
So exciting. Thanks for tuning in, everyone. We appreciate you listening, and we can't wait to catch you next time.
Take care, everyone.
Bye for now.